Good morning, everybody, and welcome to Live Trading Room's daily Forex analysis. Today is Tuesday, February the 27th, and it's midday. Let's see how the Forex market is performing through the index grid of our best and worst dashboard. The Swiss franc is in first position, gaining 1.30% on its currency basket, followed by the euro, ahead by 1.13%. The British pound is gaining 0.45%, and the US dollar is ahead by 0.39%. The Canadian dollar is slightly below parity, losing 0.29%. The yen is losing 0.60%. The Australian dollar is down by 0.65%, and the New Zealand dollar comes last, losing 1.76%. The power strength gives us the Swiss franc 100% long and the New Zealand dollar 100% short. We have significant percentages on the euro and the yen also, respectively 85% long and 85% short. The best trades so far on the Forex market are euro New Zealand dollar ahead by 0.35% and New Zealand dollar Swiss franc losing 0.37%. Now let's go to the charts to analyze the majors. Aussie US dollar is moving sideways inside the no trade zone of the target geometry with a slight bearish tendency as the pair loses 0.09% on a daily basis. The market is retracing from the intraday low marked on target number 1 of the bearish zone of the target geometry. In fact, we have a bullish price action at a scalping and intraday level. The RSI remains below 50 from M30 to the daily. We have an 85% short Australian dollar against a 57% long US dollar. So should the market go back below 0.7842, we may have a slight continuation to the downside. The euro dollar is also moving sideways just below the entry level of the bullish zone of the target geometry at 123.27. We have a slight bullish tendency as the pair is gaining 0.07% on a daily basis. The market is correcting down from the intraday high marked at 123.46 at the intersection with the monthly moving average. In fact, we have a bearish price action at an intraday level. We have an 85% long euro against a 57% long US dollar, so we should expect a limited daily range. But of course, today, most of the US dollar trading is going to hinge on Jerome Powell's appearance. Hawkish discourse is going to have a bullish effect on the US dollar. On the contrary, a dovish attitude is going to have a bearish impact on the greenback. So should the market go back above 123.27, we may have a continuation to the upside. Below 123.05, we may have a change of scenario and a resuming of the bearish tendency. The cable is moving sideways on the daily opening inside the no trade zone of the target geometry. We do not have directionality. The market is presenting a daily doji inside the previous daily range. The market found resistance on the monthly moving average just above the weekly opening at 139.89. Right now we have a bearish price action at a scalping and intraday level with a bearish percentage confluence up to the monthly level. We can observe two levels. Above 139.87 we may have a continuation to the upside. Below 139.46 we may have a continuation to the downside. Kiwi US dollar is moving in a bearish tendency just below target number 1 of the bearish zone of the target geometry at 0.7284 with a confluent price action and a breakout of the previous lows from M1 to H4. We also have a bearish percentage confluence up to the monthly level and an RSI below 50 up to the daily time frame. With a confluent New Zealand dollar against a 71% long US dollar, should the market remain below 0.7291, we may have a continuation of the current move. US dollar Canada is moving in a slight bullish tendency just below the entry level of the bullish zone of the target geometry at 126.93. We have a confluent price action up to the monthly level, a breakout of the previous highs on M15 and the monthly. The market is moving above all the moving averages of the EMA dashboard except for the yearly. We have a bullish percentage confluence up to the yearly level, and the pair is gaining 0.11% on a daily basis. We have an RSI above 50 up to the weekly time frame, a 57% short Canadian dollar, so should the market close above 126.93, we may have a continuation of the bullish move. US dollar Swiss franc is moving sideways inside the no trade zone of the target geometry with a slight bearish tendency as the pair is losing 0.07% on a daily basis. We have a daily doji inside the previous daily range. The market found resistance on the monthly moving average. We have a confluent Swiss franc against a 71% long US dollar, so we should expect a very limited daily range. But of course, we anticipate volatility after Jerome Powell's intervention. So we can monitor two levels below 0.9367, possible continuation to the downside. Above 0.9386, we may have a continuation to the upside. US dollar yen also is moving sideways inside the no trade zone of the target geometry with a slight bullish tendency, with the pair gaining 0.04% on a daily basis. The dollar in general is little moved, awaiting for the Federal Reserve Bank half-yearly report. We can observe two levels on the pair. Above 107.02, we may have a continuation to the upside. Below 106.79, we may have a continuation to the downside. That's all for today's analysis. Thank you for your attention. Good day and good trading from Live Trading Room Trading Community.